Hi, welcome to the video day. It's the 4th of October. It's Wednesday. In today's video, we're going to give our updated outlook for the USD and look at some USD pairs which we think could offer attractive risk to reward trades. Now, last few months in videos, been very bullish of the USD. It has had a great rise to the upside. We think there's more upside to come. You are going to see pullbacks, though. It is getting a little bit overbought in the short term, but there's going to be no big trend change in our view. Certain things have to come into place before a trend change can take place. The big trend is up at the moment and it looks likely to continue. We're going to go through the logic of our view and look at the pairs, and we're going to do that in just a moment. Just before we do that, if you want to learn all our trading techniques, check out our daily technical sentiment analysis of 14 FX pairs. You can get access to our member centre on the link beneath this video. You can also join our Facebook group of traders, follow our Facebook page, and finally join our free educational mailing list. Right, let's take a look at the US dollar in more detail. Right, just before we go and look at the individual pairs, I'm just going to go through some background to the big bull dollar run and why we think it should continue and what could come into play to create a trend reversal. Okay, now in terms of this first chart, it's the 10-year US government bond and it's soared higher. Okay, what does that mean? It means that interest rates are going to be high going forward. Now, until recently, the market thought that the Fed would be cutting interest rates early next year. The Fed have come out and said they want to hold rates higher for longer, and they could even have to raise rates. And I think the market now is taking the Fed seriously. We'll go to inflationary pressure in a moment. They could well have to raise rates one or even more times. Okay. Now, in terms, if I go to my next chart, where is it? Market, thought the Fed would be cutting because they think that, or thought the markets expect inflation to fall effortlessly to 2% and stay there. This is from Nordea, and they say we are not so sure. Inflation is not coming down any time soon at all. You can see this chart here. Okay, in terms of energy prices, a lot of people, a lot of media coverage of it being inflationary. Of course, it is inflationary, but there's many other areas of the economy that are seeing inflation. This is from the market here. Since pandemic, bread, coffee have become 40% more expensive. Steaks are up 19%. Gasoline is up 92%. So a lot of inflationary pressure. This one is on livestock prices, and it comes from Apollo. This is a good quote, actually. Livestock prices generally have skyrocketed since 2022, up nearly 70% in less than 2 years. This is yet another part of the inflation that is well above the 3 to 4% rates seen in CPI. Many of the items people use every day are still seeing inflation rates well above 5%. The Fed's job is not over yet. It isn't. Okay. Now, in terms, I just want to go to one more chart here. Where is it? I've done an article with some of these charts on my blog, and there's a link beneath the video. Now, in terms of where is it? Oh, it's down here. If we look at rates or bond yields, they're going up generally, not just in the US, but look at the health of these three economies. It comes from JP Morgan growth forecast indices. US growth, pretty good. Eurozone is really struggling, and China well down at the bottom of the chart. So you've got a robust economy, so the Fed don't need to ease. Okay, they need to contain inflationary pressure. Other nations are not in such a healthy state as the US. So when yields are high there, or interest rates, the economies get hurt. Okay, two more charts, then we'll go and look at some pairs. And I'm going to go here. When you get bond yields really high, you can see them here, they've soared up. This quote here, rise in bond yields of this magnitude typically ends in a financial accident. You can see several moves to the upside where you did get financial accidents. Okay, great financial crisis there, tech bubble there, Asian crisis, euro area credit crisis. The rise here is far steeper, isn't it? So here we have the final chart. The rise in global yields is the fastest on record. Okay, so the dollar supported by really good yield. Also, it's supported by a robust economy. And what else will support it is if we do get any financial accident, that will firm the dollar on its safe haven status. Now, we don't know what the accident could be, but this is banks' unrealized losses. Okay, you can see it there. That's in the US, but banks all around the world are in bad shape. So, the dollar should continue higher. Obviously, you can get pullbacks along the way. What will change the dollar bull trend? Well, speculative positioning, okay, I think, or a change in the fundamentals. I don't see a change in the fundamentals at this moment in time. What you can see here, I posted this chart. This data is from near enough 2 weeks ago. Dollar shorts, you can see them here on the right. They've been hammered. This is from the market here. They say dollar shorts have been brutally punished during the recent rise in the dollar. Imagine they start going net long. If they go net long and come round to the view of higher for longer of the Fed, and they want safety as well, then that will power the dollar higher. We'll get a bit concerned if there's a clear, a clear view that the fundamentals are going to change, which I don't think they are. Central banks can't just cut rates. Or if we get speculators really too long on the upside. I think since this chart was done, I think they'll be long, but you can see how big these previous longs are. A lot of room on the upside. Right, that's the summary. Right, let's go look at the pairs, and the first one we'll do is Euro USD. Right, first chart, Euro USD. I'm using the chart from our member center. For anyone new to our videos, when we do our technicals, they're kept really simple. We're going to use the minimum of trend lines because we've already got a bias from the big fundamentals and sentiment. So only looking at levels that we think will be important in terms of big order flow. When we do our analysis, we won't look at the market all the time. We'll do it twice a day. Once London open, once just before New York close, and then we write our levels in the member center. So you can see what we're doing. Now, in terms of Euro USD, been really heavily bearish since this move above 112. We've come down really nicely. We're now below 105, or we were this morning when I drew this chart. Now, in terms of this double trend line here, I think it will hold, or double trend lines. You've got 5 bodies here, okay, just below the 106 level. Then the round number. Round numbers are always important in terms of order flow. So we're short at 108.90, stop at 106.30. Now, despite the fact that we've had a big run to the downside, our targets are the par level, then longer term 95. So there's a long way to go on the downside if, of course, our view is correct. Now, in terms of this one, this is what we were doing this morning. We'll do my PM report in a moment. So let's look at what we're doing now. The Euro's staged a little bit of a rally, okay? My own view would be you're above 105. You could sell back through the round number, 104.80, stop 106.30, okay? So this rally I do not think will take out the double trend lines here, but of course it might, okay? Now, if we were stopped out, what would we do? We would just sell back through 105.80, so back through the round number, stop at 107.30. Now, if we got above 107, that would probably negate our bearish view. But in terms of the euro, it hasn't really staged much in terms of rallies. That's the biggest one in the decline there. So you might get a similar sized one, but odds favour euro weakness. And I'll just show you actually COT net traders positions for the year. That's their biggest long on the chart there. They are shedding longs, but their longs are still elevated. So we're looking for them to get rid of all their longs and go short. Where are we now going to go to now? We will go to the British pound. This one has seen really nice decline. And in terms of, let me bring this chart down slightly. In terms of when we saw this big rally up here, we wanted to sell. Biggest speculative net long position since 2014. And then we broke to the downside. This has been a really, really good trend. We're now, this morning, we were trading in low volatility below the 121 level. Now, in terms of resistance, you've got it here. Those bodies crossed, we got above, then we came down the big red. Then you've got some bodies and a tail here, 122. So we can stick the stop behind 122. Okay, we should go down to 118, then 116. So there's still plenty of downside. Now, in terms of this one, let's have a look at what we're doing tonight. GBP USD. Sorry, GBP USD. You've come up above the 121 level. So you could sell back through the level. If you want a tighter entry, you could go through here, 121.30. You could use a stop similar to ours if you're bearish of the GBP, of course. Now, what about if we go above 122? If we were stopped out, we would just sell at I put the dot in, or the full stop in the wrong place. 121.80. So we'd sell back through the round number with a stop behind the next round number, 123, which is also behind this 20-day moving average. Okay. So the speculators got a little bit too long there, a little bit too bullish about the UK, which is in total disarray at the moment, too bearish the dollar. Then the big decline. You can see it actually on the CFDC net traders. There is the biggest speculative long position since 2014, and they're coming out of longs. Traders a bit more stubborn with euro longs, or speculators are. This should go short and trigger more weakness. Okay, so there are levels to look out for there. Let's go to AUD USD. Right, we're on AUD USD. We did have a nice trend down here, but then it became very choppy and messy sideways action. So we liquidated our short and then shorted it here at 65, which is really, I haven't drawn the linings, we don't need it now. But there's some resistance here. We had tail pokes through and they all fail. And now we've gone down to just above the 63 level. Now I'm looking at monthly support here at 61.20, then 60. But we can actually go a lot lower than that. I think, 500 pips lower. So even 55 would be on the cards. Why? Problems in China are huge. And that is really going to weigh on the Aussie. China's out of the news at the moment. You can go and check an article on our blog about problems in China. But they're not going to be turned around anytime quickly. So the Aussie, a long way to go on the downside. I'll check the next monthly support levels down, but I would expect a major move to the downside. With any rallies up towards here, the 64 level failing, okay? So you could go through these tail lows here, just below the 63 level, then your stop would need to be 64.30, something like that. I should say 64.40. Or if you're taking a rally to here and you come off, you need to be back behind here. You can see our stop at 64.60. Don't see any good news coming for the Aussie. I think it's going to get a lot worse. There's been some optimism, or was optimism, about China in this period here, but the Aussie couldn't really break higher. Going down. What have we got next? Right, USDCAD, nice move up there, which we got most of. Then we got stopped out as we came down. Got back in this blue candle just at the 135, above the 135 level. You can see it, 135.20. This morning we were sitting above the 137 level. I put monthly resistance levels at 138 and 140 to aim at. I'm going to extend that to 145. Okay. Now, in terms of what we're doing tonight, we're moving away from the 137 level. The way I would do this one would be to basically wait for a break above 138 and go with a stop, behind these candles here. So 136.70, or we a little bit overbought in the short term. If we come through 137, buy back above the round number, and then go with a stop, I think, back here. So 135.70. This one's had a really good run to the upside, so maybe a bit of corrective action is due. Look to buy a breakout higher or a dip lower. Next pair, NZD USD, and this is really a similar story to AUD USD. A nice move down, then you kind of chop about and you poke up, come down. We're still in a range actually. We're short at the 60 level. There's not much in this trade this morning, so it might be an idea to wait for a break of the bottom of the range. In terms of how far we could go, this is around the 0.5850 level. Stop would be behind the 60 level, 60.30, and then look for a run down to 56. But I think we could go overshoot that level, just like in the Aussie, down towards the 50 level. Now, in terms of what we're doing tonight, let's have a look. NZDCAD is similar backdrop to AUD USD in terms of the big exposure to China. NZD USD. Alright, NZD USD, similar to AUD USD, down and then all choppy and sideways. And we recently sold into the round number at 60. We did go on a bit, but then we've exhausted back. There's nothing in this trade, just 100 pips or so, okay? My own view on this pair is similar background to Australia, New Zealand, heavy exposure to Asia and China. Target monthly support at 56. I will extend that target down. I think we could go towards the 50 level. But at the moment it's all choppy and sideways. So you can sell a break at the bottom of the range, okay? Which would be around 58. Sorry, let me go to the daily chart. We've come down and we've poked at these candle tails here, but we haven't broken them. So it's going to be 58.60, okay? If you're going on a break lower, stop behind the 60 level. Now, in terms of this one, sorry, I've gone to the wrong page. You could take a rally up here towards the 60 level and then look for some weakness off the level and sell. But this one's probably best on a break lower. It's all sideways, just like in the Aussie, a bit frustrating, but odds favour more downside. What else have we got? Right, we've moved to a minor pair, which is USDPLN, so dollar against Polish zloty, and we've featured this in a few videos, and it's a lesson in basically trying to run big trends. We tried to take a reasonable long here, size, stopped out, here, stopped out, then down here we got back long, and we traded about 3 trades in this one. This is a really volatile contract. Yeah, the miners offer really good risk to reward, and yeah, the exotics tend to be generally more volatile, and this one, despite the big rise, and it's a really big rise, has got more upside. Now you see the support levels I've drawn in here. Where are we going to go to? You need to go to the monthly chart. You can see we're just below the 440 level. I'm going to say here is 445, the double top blue and red body. If we break up above that, we could go up to test the 5 level again. The risk reward is really, really good, okay? Sorry, I'm back on the wrong page, on the right page now. So yeah, I mean, we've covered some other euro proxies as well, that are influenced by the euro. If the euro goes down, the correlated currencies or proxies can go down quicker. So we've looked at USD, CZK, SEK and NOK in previous videos. They've all gone down nicely on the USD as well. Now I was going to cover a few more pairs in this video, but I've run out of time tonight, so I'm going to leave it at the pairs that we've done. But the general gist is the dollar is going higher. Longer term, you're going to get pullbacks. Speculators will have probably gone long this week, but they won't have an excessive long. They'll want to buy in to the trend. Now I will at the weekend get back to doing my weekly Forex forecast. But yeah, they're the pairs for now. Thank you for watching.